Welcome back to the My Latin Life podcast. Today, another bonus episode with John Richardson from Expatriation Law. John is an expert in U.S. citizens abroad and tax implications for American expats. In this episode, we really drill down into a specific theme, and that theme is around your economic center of life as an American expat, keeping your finances in the United States versus moving some proportion of your investments, your banking, etc., abroad to your adopted country as an expat, right? So very valid topic for American expats abroad. I hope you guys enjoy it. Again, apologies for my audio on my end, but that's why we're calling it a bonus episode. No ads today, and I hope you guys enjoy the episode. Without further ado, John Richardson, Expatriation Law, My Latin Life. Cheers.
Good afternoon. This is John Richardson speaking with you from Toronto, Canada. It is Saturday, May the 27th, 2023, and this is part two of a I think perhaps ongoing discussion with Vance of mylatinlife.com fame. And we're going to have a bit of supplementary discussion about just organizing the day-to-day finances if you're a remote worker or a similar sort of person. So Vance, welcome back.
Thank you.
How are you today?
Doing well, thank you. I'm glad we made time for this part two because I think it's a really interesting topic that we're going to get into and something that would affect all Americans abroad. So thanks for the time to discuss with such an expert as yourself.
My pleasure. This is really interesting. Well, why don't we begin with your thoughts on and what is it we're talking about and why is this important?
Yeah, sure. So as a little bit of background, I may or may not be a Canadian American dual citizen. And so I do have to deal with the issues of being an American abroad, largely living in Latin America and living the digital nomad expat life, right? And at this point in time, for a digital nomad or someone less established, they're probably going to, as an American, they're probably going to keep all of their assets in the US, right? They're going to have their US bank accounts, their US ETFs, their debit cards. Maybe they have some other assets in the States. Maybe they have a rental house, whatever it is, right? But as you transition from being a digital nomad to a full-time expat living abroad, whether it be Mexico or Italy or anywhere else, you start sort of integrating more into that local economy. And so you're in Italy, maybe you want to buy a car in Italy, maybe you want to invest in a house or invest in a local business, in a local pasta manufacturing plant, right, in Italy, something like that. And so that's when you start tripping all of these tax implications, right? Because it's when you're investing in that local economy. And as an American, we know that we're taxed on our worldwide income, right? And that was sort of fine as a digital nomad because we only had one system that we were providing tax returns for, which is, just our annual US tax return. But now when you start full-time living abroad, maybe you have a wife and kids abroad, you're investing in that local economy abroad, you have a much, much more complicated kind of holistic situation where you're probably going to have to be filing a local tax return. And let's call it Italy. I like the idea of Italy. I'm actually headed there tomorrow. So you're going to be having a much more complicated tax situation where you're going to have to file an Italian tax return, and then there's treaties, and then you get a foreign tax credit to the US and all this stuff. So it makes it a lot more complicated. And I think there's a lot of issues that affect Americans living full-time abroad as expats that they might not have as digital nomads that are less established in any one country abroad.
Yeah, well, sir, obviously you're, not 100%, but 1,000% right on that. Okay, so let's separate reporting requirements from taxation. Okay.
Mm-hmm.
Now, as you're probably aware, one of the realities of American citizenship is that the Internal Revenue Code requires American citizens, frankly, to report, on any aspect of their life, pretty much that's non-U.S.
Mhm.
So, you're aware of the what used to be called the FBAR, the FinCEN 114, where if an American citizen has a bank or financial accounts outside the United States with an aggregate balance of 10,000 US or more at any time of the year, they have to file this form. Or if they have foreign financial assets above, if they meet the test of being an American abroad, 200,000, possibly even 50,000, depending on how they view themselves. That's another form. And interaction with creating a non-U.S. corporation is another form, or a non-U.S. trust. I mean, the national anthem of America in the 21st century is, frankly, when it comes to anything foreign, report early, report often, report everything, and keep a record of what you report. Otherwise, you're going to be subject to massive penalties. Now, you're talking about a remote worker, digital nomad. It may very well be that it makes the most sense for somebody like that to keep their their credit cards, their bank accounts, in the United States to avoid.
Yeah, which is what I do. I use a 0% foreign transaction fee credit card, an American credit card. I use American debit cards, and then anywhere around the world, we just pull money out of the ATM. I have debit cards that have zero ATM fee, so it's actually free to pull money out of the ATM. And you can typically pull out like a pretty good amount, like easily over $1,000 a month. And so that could be used to pay your rent or just any kind of expenses if you're in a more cash-based society. And so you can usually get away, like even like full-time expats often get away with that, where they're just using US credit cards and they're pulling cash out of the ATM if need be. And if you need even more, you can maybe do Western Union, or maybe
Yeah,
have a local, like
or you have
there's
multiple credit cards,
yeah.
or something
So
like that. And I think that
multiple debit cards,
this is
yeah.
not something, as that's part of my world, particularly because most of my client base would be people who actually live completely reintegrated in other countries. But I do think that this is absolutely correct, that we've talked previously about maybe we should go over that again, how to use the foreign earned income exclusion, right, to severely minimize US taxation. And then
Yeah.
we get out of the reporting requirements by just keeping everything US centric, right? So
Yeah, and so so what we discussed actually on the episode of the My Latin Life podcast where you guessed it was that keeping all of you made the argument that keeping all of your assets and financial center of life in the US was unrealistic for, or just not the case for most Americans abroad.
it's
And I
unrealistic for those who become tax residents of other countries. I mean, I think that's what trips the balance here, right? So let's focus on that. So again, we've talked about the fact that for the remote worker, digital nomad,
yeah, that's easy. That's easy.
yeah,
But here's the thing is like
that's easy. They're not going to typically they're going to try to avoid becoming tax residents of another country. I think it's probably the name of the game.
for sure, that's a lot of what we talk about is
Tax
kind of not.
residency is not a presumptively good
Yeah.
thing, unless okay, you can use it as a treaty tie break to get out of a less favorable tax residency, but that's a different topic. All right, so let's say that you decide your digital nomad days are over, your remote worker days are over. You settle down in another country, and you become a tax resident. Now, tax residency means that you're subject to the full force of taxation by that country, whatever that may mean. And there's a whole, and countries are different. Okay, they're definitely different. Different rules, and these are not complicated rules, okay, to figure out, but you do have to know what they are. But one of the things about tax systems is that they're no longer just about tax. They're about financial planning, they're about retirement planning and things like that. So let's imagine, for example, that a U.S. citizen goes to, say, Canada, all right? Which I understand for your group is probably not their first choice, but it's a good example in the sense that they move to Canada, they're going to use the Canadian tax system, in a variety of ways, right? They might get what's called an RRSP, a registered retirement savings plan, or tax-free savings account. They might set up a small business corporation because, those really double as pensions in Canada. And this is true for other countries as well, but I'm just, talking about the stuff, that I'm most literate on. Now, once you do that, right, your financial center of gravity is no longer the United States. All right, it becomes Canada or another country, and once your life becomes centric in that country from a tax residence and financial or retirement planning point of view, I think that keeping your financial life sort of U.S. centric is probably not realistic.
What makes it unrealistic?
Well, I think the difficulty perhaps in a credit rating.
So building credit in the new country?
Certainly, is going to be a factor. You're going to be building banking relationships, to get a mortgage, perhaps. Just the sheer fact of using the tax system in another country is going to incentivize and force you into having a financial blueprint in that country, isn't it?
In some ways, yeah, it's an interesting trade-off because you
may
could
be able to
maybe
keep some of it in the U.S. Nothing's going to keep you from,
because you could keep having that 401k in the U.S. and contributing to that in the U.S. every year.
Well,
right?
but that may or may not be true, actually. Okay, and that's theoretically that's okay, but again, if you're a dual tax resident, okay, you're filing taxes in Canada as your primary home. You're also filing a U.S. tax return. Now, there are different ways of filing U.S. tax returns, right? If you use the foreign earned income exclusion, for example, that opens the door to your being able to have, I think, effectively a TFSA. But what it also does is, I believe, would close the door to, a 401k type of thing, et cetera, right? So, it's like what one tax system giveth, the other taketh. Now, another point I would make on this, is that it's very, particularly because the U.S. system is so complicated, it's very easy to think only in terms of the U.S. system. But, Canada's got foreign asset reporting rules that are fairly penalty laden as well. So you're going to have that level of reporting, and, they're nasty. All right, they're nasty. Now, I think that, the reality here is sort of in between, not totally one way or the other. But it does seem to me that if you're going to integrate into another country, do your financial planning through the tax system of that country, the tax incentive plans, etc., you're going to have some financial presence in that country. I think it's just inevitable. May not totally, all right, but any kind of financial presence seems to me that you're not going to be able to just rely on your U.S. credit cards and that sort of stuff. But it doesn't mean you get rid of all of them either. All right, another point I would make, interestingly, is this, that what a lot of financial planners report, there's a whole ecosystem of financial planners who specialize in nothing but U.S. clients because of these rules, is that, for certain brokerage firms and that, once they find out you're living in Canada, they're going to collapse the account.
True. Yeah, and some are
Yeah.
more friendly than others.
Yeah, I mean, they vary, right? They vary. Now, I think it would be an interesting project. I'd be happy to sort of collaborate on that with you to some degree, but I think an interesting project would be to what extent can somebody who becomes a tax resident of another country, and if as a U.S. citizen you're a dual tax resident, to what extent would you be able to, keep everything going in the U.S. to the exclusion of that other country?
Definitely simplify reporting.
Yeah, absolutely it does. I mean, I think that's one. Well, it simplifies the reporting from a U.S. point of view. It may create reporting from the point of view of the other country, like Canada, for example.
Yeah.
And then you've got the whole. You talk about. I actually had this discussion with somebody recently. So you talk about. Well, here was the context of the discussion. Somebody came to me and said, and by the way, I'm not 100% sure of the answer to this. I was just thinking out loud, but said to me, well, I'm having a problem with my U.S. taxes by using a French corporation in France. These are these who could have. So she said to me, well, I think what I'm going to do is set up my stuff in the U.S. Well, okay. But all of a sudden now you've created a foreign corporation from the perspective of France, right?
Yep.
And they have these rules as well.
That's interesting.
So, as always, I'm not sure there's 100% hard and fast rule on this. But the dividing line very definitely is becoming a tax resident of a second country. If you can avoid that, I think your chances of just keeping your whole situation U.S. centric are probably pretty good. Okay.
Yeah.
Great.
And what we recommend if people have the choice of where to live is to choose a territorial tax country where they don't have to report what they have, their holdings and income from abroad, right?
That would be a good argument for a territorial tax country. It would definitely be a good argument for it.
Right. So in a Latin American context, that might mean don't go to Brazil, go to Paraguay or Uruguay, where it's a territorial system and you're going to have vastly simplified reporting and this and that. But obviously, for a lot of people, it's inevitable. Maybe they have a job in a foreign country. Maybe they have a significant other and end up starting a family in a foreign country. They just
there you go, right there. I mean, doesn't a job, and I'm not sure the answer is necessarily yes, but it seems to me that having a job in a foreign country is going to necessitate bank accounts and and all that stuff, isn't it?
Probably at least one to get paid, yeah.
Yeah, I mean, it's interesting. I mean, you're talking about, basically creating firewalls, sort of I have this image in my head as you describe this of a bunch of firewalls, right? So we decide that we know the U.S. has the worst reporting rules of all, so we keep all our assets in the U.S. to avoid that problem.
Yeah.
All right. So I think we know that it works for the digital nomad, mostly for a while. Dividing line is become a tax resident of another country. How long can you continue? Being outside the sort of.
And I think if you're living in a territorial tax country, you could basically keep everything in the U.S. forever and have and just have everything in the U.S. and keep a pretty minimal presence in the adopted territorial tax country. So I think that's a pretty simple situation.
If you're not working, if you're not
working,
but you're not employed.
Right. Or even if you just have one or two things going on, it's still not too bad. But it's when you're in a full out, quote unquote, like real
country. Yeah, I mean,
residency based taxation country like Canada
creates problems. Okay, it always. In fact, I would go so far as to say this: it's worldwide taxation that causes all the tax complexity, including the treaties, right?
Yeah.
Because what is worldwide taxation other than the claim of one country, to tax the income earned by one of its residents in another country? That's all worldwide taxation is. And look at what that spawned, right? All these reporting requirements, the whole OECD treaty system.
Mm-hmm. And you didn't full out say it this way, but it's not just a reporting issue where the US actually very much disincentivizes you operating outside the US. So they disincentivize foreign corporations, they disincentivize anything offshore, whether it be businesses or assets or investments. And so it's tough. And you know what I mean? Let's just say someone's living in Mexico and they get the opportunity to invest in a coffee plant or something, like a coffee company. And it's almost like I don't even want to do it because I just know how much of a headache it's going to be. It's like I think to some extent talking about tax all the time is a bit of like it has to be done, like someone has to take care of it, but it's like a little bit of a lame discussion because at least if you're getting taxed, that means you're earning and you're making good money. But I think another aspect of how it can be interesting for US citizens abroad is just investing abroad. And it makes sense to diversify and invest abroad and invest away from the US dollar a little bit. And it's just like, what comes along with that? Like, how complicated is that going to be for me to invest in that Mexican coffee company type
Well,
of
it's going to
thing?
be very complicated if you invest directly, right? But a possible solution would be to use U.S. mutual funds, right? That invest in non-U.S. companies, this sort of stuff, right? I
Yeah.
mean,
Yeah,
it's
but I mean like direct investment where you're
very
really like
difficult, very
you're
difficult.
buying equity. Obviously anyone can buy an ETF and those are kind of like world diversified or whatever. But I mean like really investing in a non-US business or just a business that's not US based. You know what I mean? Like you establish that life in Italy and your cousin says, "Hey, can you invest in my coffee or my my pasta manufacturing company?" You're just like, "I can't. It's going to be too complicated from a US tax perspective." And they're like, "Bro, like what?" Like, you know what I mean?
No, that is absolutely 100% correct. Okay, I mean, if you look at, say, the Form 54, this is the reporting for that type of investment is in what's called an IRS Form 5471. It is so intrusive. It is so complicated that there are courses you can go to like for 5 days to learn how to fill out this form. All right, it is simply over the top, and the whole purpose of it is to track income that's being earned outside the United States for the purposes of present and future U.S. taxation.
Mhm.
I mean, it's a big problem. And it's interesting. I noticed before our discussion today, I looked at your Twitter feed, and one of them, I don't know, I think you were asking about renouncing U.S. citizenship or something. There was something about renouncing U.S. citizenship.
Mhm.
And what I noticed was there were like 18 or 20 replies, and I think the vast majority were saying, no, I'd never renounce U.S. citizenship. This isn't a problem, blah, blah, blah.
Mhm.
Well, it's pretty clear to me that none of those people have actually attempted, to have a financial life that's outside the United States. Because if they had, they wouldn't be so dismissive of it at all. In fact, the main reason that people renounce U.S. citizenship is because U.S. citizenship is a disability when it comes to doing anything financial outside the United States.
Mhm. And so what can people do if they do have opportunities for international investments? Would you say to maybe wrap that in a US LLC? Could that combat things a little bit?
I don't know about an LLC. Well, okay, there's three things that a U.S. citizen can invest in that are not going to create, I'll call ancillary problems. Okay. The
Mhm.
first is just anything that's interest bearing, right? Okay, which is not very exciting, but at least it's something. The second are individual shares of non-U.S. corporations that are just sort of traded, on the market, whatever. And the third is real estate. Okay. Now those three things generally will allow one to invest outside the United States and just treat the stuff mostly from an income perspective, okay, without a bunch of additional reporting. But anything that involves in creating a corporation or a trust, there are many countries where they use business trusts, etc., is not impossible. Okay, there's no law that prohibits anybody from doing any of this stuff, right? But is opening the door to massive U.S. tax compliance problems. And, in many cases, it's just not worth it. I mean, an American who sets up a business abroad, you want to go to Mexico, set up a coffee shop or a dry cleaning business, or even the most pedestrian,
right.
Is going to have possible difficulties. I mean, if you want to set it up under your own name, so it just, so there's no entity creation, that's fine. But it's tough. It's tough. I mean, you got a ball and chain on you.
So what's the best way to do it if it's just inevitable? I just have to open that local mechanic shop or whatever it is.
Do it under the name of Vance.
So you do it, is it better to do, yeah, so I guess I guess the decision set is in your own name, US LLC or local LLC. I've heard local LLCs are usually a nightmare. So it's either in your own name or a
anything that
US
is,
LLC.
by local, you mean foreign to the US.
Yeah, like local
That's
to the
all
country.
you need to know.
Yeah.
That's all you need to know. Any involvement with a foreign entity is going to get you into, all kinds of issues. Maybe they can be resolved easily. But, I don't know if you like having lawyers and accountants in your life. I personally don't. All right. And I think few people do, but it's going to open the door to that. Okay. Entity means something separate from you as an individual. If you do your stuff as an individual, you're minimizing the chances of problems, and that's what I would do. Okay, even if it's marginally more expensive from a tax point of view in that other country. I mean, a U.S. LLC, I don't know this. I don't think that's necessarily a separate entity. I'm not entirely up on that, but I doubt that's gonna happen. Well, let me see. So you've got all right. So the question becomes: can you have a U.S. separate entity? Well, maybe you set up a U.S. corporation, a U.S.-based corporation, to run that business, outside the United States. But then, of course, the question becomes: what's the view of the other country on that? I am not a fan of what I'll call entity creation. In fact, I can't stand it. All right. Every time you bring a new entity into the world, corporation or trust, you're creating a tax compliance requirement somewhere. And I can't stand that stuff. Okay. I mean, I think you want simplicity. I think you're going to have fewer options if you leave the United States. But generally speaking, everything in your own name, no overlays of entities. Okay. Set up a business as a proprietorship. Invest in individual shares, interest-bearing documents, and real estate if held in your own names, generally okay.
Okay.
And that's far from nothing. Okay, it's far from nothing. I mean, it's not ideal either. But look at it this way. I mean, a lot of people like to create separate business entities, partly for reasons of limited liability, partly just because they think it's fun to do so. I don't think it's fun to do so because you're just creating new responsibilities. I do think the limited liability thing, though, is a factor, right? And then, of course, though, there's another layer to this, and that is that the fact that it is a foreign entity from a US tax point of view does not necessarily mean you don't have the option to treat it as though it's not from a US tax point of view. These are called disregarded entities. And that may or may not be possible as well. But all somebody would have to do is listen to this for 10 minutes and think, I don't want any part of this.
Yeah, it definitely sounds intimidating.
Well, it's not so much that it's intimidating. It's a combination of, not being able to fully understand it. And by the way, that if you have a foreign corporation from a US point of view, there are only some countries and some types of corporations where you have the option of treating them as disregarded. For example, Canadian controlled private corporations are all deemed what are called per se corporations, with one or two exceptions. So, I mean, it even depends what country you're in. Right? I mean, if you want to keep US citizenship, and if you want to, live outside the United States and do this stuff, I think you need to strive for simplicity. Okay, as simple as possible. And, you're probably going to have to get used to liking lawyers and accountants if this is possible.
Yeah, and one thing I've found in my experience doing this is that it's very difficult to find one lawyer or one group or one accountant that can cover your holistic situation, both in the US and in your adopted country.
Yeah.
So you often have to have sort of two accountants, and then it's tough to have them work on the same strategy because they don't understand
They
the
don't
implications
understand.
of
They
them.
don't understand from the
So
other. Yeah, that's right.
yeah, there needs to be I don't know, some education in the American accounting schools or something of getting people to sort of specialize more in international accounting, and having people being able to do both sides of it. Because yeah, it's very tough to have one person do the Canadian side and then one person do the American side, and how do these things really square up? It's definitely a tough thing.
That's right. And you get people paying more tax than they should. I mean, I think, if you're looking for general principles, I'll give you, some of my, well, they're thoughts. They're also opinions. So, if people don't like it, I'm not claiming it's right. But the first principle that I believe in is that you will never get the best professional advice from advisors inside the United States. Okay. Because for them, almost all of them, this is a niche area, and the only way to understand it is to actually live it, okay, which they don't or haven't. So that's point number one. The second thing is that, if you're just a regular guy, what you want to find a tax person, accountant, whatever, a tax person. Remember, accountants are not necessarily tax advisors, but you need somebody who specializes in dual tax residency in that.
Yeah.
So, there are people, I know a lot of them, right? Toronto's probably where I live, is probably, the place where you're going to get the best US Canada tax advice, I think certainly in the world. Okay. But even here, the number of people who are completely fluent in both the Canadian and the US tax, there aren't that many of them, but that's not the problem. The problem is that people don't understand that it should be done under one roof. For some reason they have no problem, with the assumption that, well, I'll get my taxes done in Canada by one guy, and now I'm going to go to the guy next door who does the US. That's a terrible mistake, I think.
Yeah, that makes sense. And I guess as a matter of housekeeping, would you say that you would always do the adopted country tax return first and then the US second to sort of square it up? Or is there any situations where
Well, I think,
not...
it's funny you asked me that, because I'm working with somebody right now where the person is a Canadian tax resident, but the income sources are in the US, right? generally speaking, okay, I think you want to do the one where you're getting, where the income is sourced to, right? With most people in Canada. Okay, so let me explain it this way, okay? Obviously, in part, you're trying to avoid double taxation, right? Yes, the answer is yes, for sure. Okay, you're trying to avoid double taxation. So there are different ways of avoiding double taxation, but the best long run way of avoiding double taxation is to use foreign tax credits, right? In other words, let's say you have somebody in Canada, a dual citizen in Canada, living in Canada. You want to avoid the double tax. So what you're going to do if you're working in Canada, whatever, is you would want to determine how much Canadian tax you paid on your income in Canada, and then use that tax as a credit to offset the US tax, right? All right. So in that case, you would do the Canadian tax first. And that, by the way, I'm sure you're aware that Americans abroad have an automatic extension until June 15th, right, under a Treasury regulation to file. You're presumably aware of that. Now, I've never seen anything written down what the reason for that is, but I think it's clear that the reason is that in many cases, the tax liability in the non-US country will be necessary to help them do their US taxes properly, right? Okay, so in that situation, Canada, you're probably doing the Canadian taxes first. But if it's a situation where the vast majority of the income is US source, and this would be, let's imagine somebody who, let's say a Canadian citizen, a dual citizen, somebody born as a dual citizen, has their whole professional life in the United States, everything, their pensions, their, this, their, that, come from the United States. And let's say they move to Canada for whatever reason, or I've actually seen this, they move to Canada for marriage or something, right? Later on or down the road, what have you. Well, in that case, their income is US source. That means the US is going to have the first right of taxation, right? So you would do the US tax return there first, okay, to determine what the US tax was paid, because that would be used to offset the Canadian tax, right?
Makes sense.
Okay, so I mean, it's dependent on the circumstances. But
yeah,
what I really think is this, I just don't understand why it's so hard to convey this point effectively, at least I've failed at it utterly, is that the type of people who is your target market, the type of people you think about, the type of person you are, right? These types of people need to find tax preparers who not only can do both returns, but can, give you advice here and there about how to optimize your tax situation. I mean, let me give you an example here, okay? Canada has, these RRSPs, right? And, you're going to get a tax deduction if you make a contribution, but you can not make contributions for years, and you can have a massive contribution room, right, that you can make in a year. But I mean, if you make a contribution, let's say your income's Canadian, you make a contribution, say $50,000, that's going to be a deduction. I mean, obviously, you're going to use this deduction for Canadian tax purposes. But if you do that in a single year, what's going to happen is you're not going to pay enough tax to offset the US taxation, right, on that income. Right, you see what I'm saying? So you need somebody, who can also operate as sort of as a tax financial planner. Now, there are people like that around, to be sure. There are people like that around. The good ones are worth their weight in gold, for sure. But it's like, I don't know what good they are if people don't understand why they should be using.
Yeah, definitely makes sense. I think what I've seen just from being at the IMI conference, I was at the same lunch table with a guy who does US taxes for expats, and he's based in Italy. And they sort of structure their thing as a family office or a wealth management office. And so they take over your whole situation, and they sort of get involved in your 401ks and your basically like your whole situation on the US side. And then I think they also take care of maybe that local side in the adopted country. And then that way they're able to provide that strategic insight. I'm sure it's that's a high touch service, but as you said, it's probably worth its weight in gold.
It is worth its weight in gold. Okay, well, it's also more likely to keep you out of the problems, and create penalties and, and stuff like that. Because, I mean, look, I have personally had, I work with people all around the world and do so, right? And so I've had this experience of, trying to help somebody from a US side, but, wishing I had a better understanding of what this means in this country or that means, etc. And,
Mm-hmm.
there are certain cases where I'm probably a good advisor, for them. But I could be a better advisor, if I were completely fluent in the tax system of that other country, right?
Mm-hmm.
And this is, an extremely important thing. Extremely important because taxation is no longer really about taxation. It's about life planning. It's about retirement planning. It's about creating, investments that are more or less advantageous from a tax point of view. And you have to be able to understand all relevant tax systems when you're doing this.
Crazy. And so what does the average person do? Do they just yeah, like what obviously it's basically impossible to do yourself. You have to have professional support for this.
I would say that's true for 90+% of people. Yeah, I would say that's true. Well, I think most of them do nothing because I don't think they realize that, the key thing they should be doing is just what I've tried to describe here, right? They suffer. They suffer from, mistakes in tax returns, from tax planning that, is not optimal. They probably pay, I bet they pay more money by having two separate ones. I bet they do.
Mm-hmm. Yeah, you have to.
Oddly enough, right?
Yeah.
I don't know what they do. They renounce US citizenship. It's what they do because they don't see a way out of this problem. And for a lot of them, there isn't.
Well, here's the thing, a lot of the people are just residents in the adopted country. They're not citizens, so they might not have that
That
option
is
to
true.
renounce.
That is true. That is true. Of course. It kind of assumes that, you can renounce US citizenship. Actually, the opportunity that renouncing US citizenship is, I think, an opportunity for a select number of people that frankly is priceless. It may not be of practical value to a certain demographic. I think largely your digital nomad people, I don't think are at that stage. Particularly if they're wanting to keep their financial life centric in the United States. But, to be clear, everybody sees this from the point of view of their own life circumstances. Try being somebody, somebody who's trying to retire, living in a country outside the United States as a tax resident of that country. It may not be impossible, but it will be far more difficult to manage this stuff.
Mm-hmm.
So, it's definitely not one size fits all. And people, people always see this stuff through the circumstances of their life at present, okay, which makes sense. Okay, but the other thing they think about taxation, I've noticed, is they think that they understand taxation to be the same as whatever tax return they're most familiar with. So, you get these people in Canada. Canada has high taxes, but it's a simple tax return, okay? the US actually has high taxes too. I don't think it's high as Canada, but it has high taxes. But a system of complexity that bears no relation to the Canadian thing at all. And definitely creates tensions. And another thing that just came to mind on this, and I haven't really sorted out my thinking on this, but if it can be sorted out. But there's all this emphasis in the digital nomad world, right? We'll call them the foreign earned income exclusion types, okay? There's all this, they have to worry about the self-employment tax, right? So you move to, say, Mexico, and you make your $112,000 and you say, wow, this is great, it's all tax free. But you do have the self-employment tax, right? Now, reflexively, people want to avoid that, reflexively. But I remember saying this in the podcast we did earlier. I'm not sure this is the right answer for everybody, but there is a certain group of people who I think might be better off to pay that self-employment tax to pay into Social Security. To start creating that, because U.S. Social Security is, in terms of government pension plans, about as good as it gets.
And it's kind of one or the other, right? Like you kind of have to decide if you want the Canadian pension or the US pension, if you're like a dual citizen or whatever, resident of one citizen.
I'm not entirely sure I know the answer to that. Last week I was talking to a guy about this, and I'm going to explore this further with him. It's just a long-term sort of planning thing. He was describing to me how he had organized all these things to maximize chances for both, right? But I mean, he's in the UK. This is an interesting topic. I'll know more about it, within the next while, or have thought more about it. Maybe not know more about it, but we'll have thought more about it. But I'm not sure it is one of.
Yeah. It's like, do you get both in full, or maybe there's like an offset, you know what I mean? Where it's like,
well, the US has a windfall elimination provision, right?
was that?
Well, it means that if you're getting U.S. Social Security and you're entitled to Social Security in another country, they're going to reduce the U.S. Social Security.
Would you say that the Canadian Social Security or pension is typically higher?
Absolutely not. I think
No?
U.S. Social Security is totally superior.
Really?
I don't even think it's comparable. I mean, partly because there's some amazing things about U.S. Social Security, right? A spouse, can get Social Security because you get, so an American citizen gets, whatever amount of Social Security. All right, it's not bad at all. I mean, certainly the Canadian equivalent is certainly not higher, and it's generally lower, I think. But what's amazing about the U.S. system is how spouses will get benefits. Children get benefits in certain circumstances.
Right. Even after you pass away, I think.
Yeah, I think that's right. But what's interesting is, I mean, let's say you've got, you're married to somebody for 10 years, you're divorced and you're not remarried, you can collect off that person's Social Security without limitation. There's like, say you had four, I don't know how anybody could possibly navigate life like this, but let's imagine you've had four spouses, okay?
How did you know?
Oh, is that you? Okay. Anyway.
Sorry, please continue.
No wonder you're spending your time in Mexico. All right. In any case, yeah. Whether it's four, whether it's five, or whether it's two, right? The point is that there's no limit on the number of spouses, I believe, who can collect on that. So
and do they have to share it, or do they each
No,
get...
it's not. That's the point.
Yeah, the pot grows. It's not a fixed pot.
It's incredible. It is absolutely unbelievable. So, I mean, it's great for the serial marrying guy or whatever, or woman, or something like that. Anyway, you know, what I'm saying is approximately correct. Okay, I mean, I don't have the exact info in front of me, but what I will say is that U.S. Social Security is generally lucrative, and it has features that are not available under the Canada Pension Plan.
And what are those features? Sorry. So we talked about the one, but what are some of the other ones?
Well, there are situations where children can collect benefits because you're entitled to Social Security.
And that exists in the US, but not Canada?
Well, I'm just talking about features of U.S. Social Security. I don't think these are features of Canada Pension Plan.
Okay. Sorry, keep going.
But I will say that I know more about U.S. Social Security just because I've sort of been forced to learn about it, but also because I've just, I mean, it was so fascinating to learn this stuff that it was easier for me to remember. Okay. But anyway, so there are children who in certain circumstances can get Social Security. Present spouses, okay, can get it. Past spouses can get it. And there may be more, but I think that's enough to make the point here.
Mm-hmm. And I think I looked into this once and I saw that if you pay into one system or another, there's like Social Security pension treaties among a number of different countries.
These are called totalization agreements. Okay.
Yeah, so it's like if you pay into one, it counts as paying into the other for like
That's
total
right.
number
That's
of years
right.
paid in.
Yeah. So the U.S. has 20-somethings totalization agreements, Social Security totalization agreements, and they're with the countries that you might expect: Canada, UK, Australia. I mean, the sort of first world democracies that have this stuff. Now, again, this is highly technical stuff, so I'll just give you the general principle, okay?
Okay.
Everybody has to do their own digging. But the purpose of the totalization agreement is to help the kind of person who, let's say they're a U.S. person, and they work abroad, for outside the United States for some number of years. And if the effect of that is that they wouldn't be able to get, Social Security in either country, right? Because it's, two different countries. They total the years, hence the word totalization. They total the years worked in both countries so that you can get benefits in one country. So, say you work 10 years, 20, say 15 years in the United States, and then you move and work 15 years in Canada, or something.
Mm-hmm.
You can total the years
Yep.
when you go back to the United States to be able to get your U.S. Social Security.
Mm-hmm. And so it counts. It'll count as 30 years total.
I believe that's right. That's the governing principle. Okay.
Yeah.
I presume that it washes out in that way. Okay. But again, being really honest here, okay. Have you ever tried to read this stuff?
I did once just to check. But yeah, I mean, I'm sure it's dense. I'm sure it's dense.
It is. So I mean, these are sort of, issues that you need to explore at the relevant time. But my point is this, okay, that, and I may be wrong on this, or may be wrong in certain circumstances, but I do not think that paying the self-employment tax for the people in your ecosystem, right, that's just mainly the digital nomad types, I don't think it's necessarily a bad idea at all.
Mm-hmm. Yeah, I've heard that as well. It's like, what, because it's whatever it is, 6.5%, or actually even higher. No, it's like
high, it's 15%.
It's 15, right. Because if you're employed, you pay 7.5 and the employer pays the other half.
No, that's exactly right. But look at it.
But if you're self-employed, go
so
ahead.
you go to another country, you're self-employed, you're running your life through the foreign earned income exclusion. So you're paying a 15% tax, which may not feel good, but I'm not sure it's the end of the world. Because what you are doing is contributing towards that.
Your retirement. Yeah. It's like the only tax where you get something out of it.
Well, I got to tell you that, if you look at Social Security over the last few years, the payments have gone up, indexed to inflation. What investment guarantees that? Now, I will tell you something here, okay? All right. So, I'm not one of your young digital nomad types, okay, as you probably know. But I can also tell you that if I were in my 20s and somebody, and I heard what I just said when I was in my 20s, I would have said, this guy is completely out of his mind. That's the stupidest thing I've ever heard. To pay this self-employment tax, when I don't have to, right? Well, what's that Mark Twain saying? Remember the Mark Twain thing? When I was 14, my father was so ignorant I could hardly stand to have him around. But when I turned 21, I was just amazed at how much my father had learned in 7 years. In other words, I was wrong, okay? The way I was thinking then.
Mm-hmm.
And that's not the only one. So,
Yeah, I've definitely heard both sides of it. People say, oh no, I want the money and I can compound it and
if they
whatever.
won't compound it, they won't compound it. This is the thing, okay, that, there are a certain number of people who have the investment skills and the discipline to do that. Most don't.
Yeah. No, I mean, definitely makes sense to pay into one system. And I guess the other part of it is like, don't accidentally pay into two systems, right?
Don't accidentally pay into two. I don't know what the answer to that is. How do you pay into two systems?
Like maybe you have income streams in both countries and they're both taking like
I
self-employment
don't know.
because there's a limit, right? Like it's like after you pay into it, something I forget what it is, like 100K a year, then you don't then it goes away in the US.
I believe there are limits. There certainly are in Canada. I believe there are limits. That's right. Yeah, there are limits. Yeah, I don't.
Fair
I
enough.
don't know. I'm just making a very, very narrow point here, and that
Yeah,
is that I think it's wrong to, and I think you agree with me, okay, that
yep,
it is wrong to presumptively see Social Security payments, the self-employment tax, as being a waste of money, as being something to avoid. It may be something to embrace for a certain type of person.
cool. Well, we probably hammered on that one enough.
Probably gonna get myself fired from your podcast for the last statement. But I actually, it depends. People are different, right?
Yeah. Yeah, so I think we covered some good ground on this one. We definitely learned things that are hairy, but hopefully we've introduced some solutions or things to think about as well. Obviously, we could go on forever about this stuff. Do you think there's any like big overarching topics or themes that we should mention while we're still talking about this on the podcast, as it relates to I guess U.S. citizens moving
Well,
their economic center of gravity abroad and dealing with
I
the
think
issues.
I think it's completely a stage of life, a type of thing. Obviously, for somebody who sees themselves as right, their identity is tied into being a digital nomad, but they're going to do it as a U.S. citizen, and they're going to avoid tax residency in another country. I think that's a no-brainer. Sure, keep your stuff U.S. centric.
Yep.
Your life will be a lot easier, but life changes, I mean, I'll tell you, let's say that the digital nomad, settles down, marries somebody who's a resident citizen of the country.
Yep.
Do you think the discussion, I want to keep all my assets and money in the United States, do you think that would go over very well in a marriage?
Yeah, I think that should be fine.
Yeah, it might be okay. All right. Well, you're a different generation.
See, because I'm like right near it, as I said at the beginning of this recording, where I've been traveling 5+ years consecutively, no lease, backpack, Airbnbs, 5+ years, and so I'm definitely getting to the point where I want to at very least get a you know a proper 12-month lease or buy a property and definitely live outside the United States, uh, probably in Latin America, right? And so these are things that I'm actively thinking about. And you think about, what happens when you start having a couple kids and maybe they're going to school in that adopted country and all the kind of implications that we've been talking about. And so I've been kind of working through in my mind a lot of the things we're talking about on this episode in terms of, okay, so do you keep your economic center of life in the States? You basically keep your money there and then you just kind of draw upon it as you need it. And maybe the kids' private school will take an international wire transfer from Chase, New York, and all this stuff. So it's
They
interesting.
probably will. I mean, the good thing about
Yeah.
money is most people will always take it, right? I mean, the problem is not, I think, necessarily the payments. The
It's not,
problem is,
yeah.
just interacting with, the United States or Canada. I mean, you look, the United States, Canada, and probably France, I would call the tax axis of evil. I mean, it doesn't get worse. It's impossible. All right. Well, maybe not impossible, but difficult. I mean, they're up there. I don't know. I mean, it's not one size fits all. It sounds to me like you should have a blog and you can call it My Tax Residency Journey. The evolution from US tax residence only to something else, see how it actually works.
Yeah, well, we have a bunch of Telegram groups actually for expats, and I was almost thinking about spinning one up specifically for U.S. citizens abroad because there's just so many issues that are really specific to Americans that no one else wants to hear about, but for us, they're like super important. And I think you've actually done a very good job of that. You kind of made that your focus, just services and content for Americans abroad because it's a specific niche, but obviously there's 350 million of us and we have our concerns and it's very real and it's something that we have to deal with every year.
Yeah, I think that's right. I mean, there are blogs and Facebook groups, that discuss this stuff. But the one of the problems with them is that they're largely um, the blind leading the blind, right?
It's incomplete at best.
Yeah, so they're dangerous. But hey, U.S. citizens are they're just different. That's all.
Yeah,
In fact,
because
I
I
think that
think
I've always thought that the Asian Airlines Thai Airways should come out with a new class of service called American class that will give you a printout of exactly how much time was spent in U.S. airspace and et cetera.
right.
I mean,
That's funny.
it's so ridiculous. It is really ridiculous.
That's very funny.
Well, it is funny. The problem is there's a lot of truth to this. I mean, I should send you a something I wrote about the problem of U.S. citizens working on ships, cruise ships.
I haven't heard this one.
I don't even, you know what? I'll send it to you. Okay, shoot me an email, remind me. I have to find it. But I mean, I didn't even know this. I was, until I was kind of forced to get into this. But well, the bottom line is this. Okay, that international waters, a cruise ship that's in international waters is not in a foreign country. Okay.
Right.
Because it's not in a foreign country, you can't get foreign tax credits. You can't have the foreign earned income exclusion. So guess what? It guarantees being subject to double taxation.
How's it double though? Who else is taxing it other than the States?
Your country of tax residence.
Okay.
Same thing for planes. Remember this, okay? You're apparently a dual citizen or you're a U.S. citizen. And remember this:
Yeah.
that if you're in international airspace, you better not be doing any work. In fact, you get pictures of yourself not working. And if you're watching a movie, you make sure it's not business related. You want to watch The Wizard of Oz or The Sound of Music or something.
Got it. Got it. So yeah, when I'm in my yacht on international waters. Okay. Hey, I know you probably want to get wrapping up. I do want to squeeze in one self-interested question that applies to U.S. citizens abroad. So we all know the foreign earned income exclusion, less than 30 days in the States for the physical presence test. But then there's also the bona fide residence test, right? Where if you're a bona fide resident of another country, your center of life's in another country, blah, 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 you can actually spend potentially more than 30 days a year in the States while still claiming the FEIE. Do you have any insight into that in terms of the uh, claiming the bona fide residence test in order to spend more time in the States per year? I've heard from certain sources like Nomad Capitalist, where if you're truly like a bona fide resident of somewhere else, you could maybe spend up to 3 or 4 months in the States per year and still claim the FEIE.
Yeah, you need a tax home, I think. Let me just pull up the statute. Give me a second, okay? Okay, oh God, Internal Revenue Code. I'm already sitting down, so if I fall asleep, it's okay. Let's see here. So this is 9/11. All right, so this is governed by section 9/11 of the Internal Revenue Code. Citizens or residents living abroad. Make it sound so good, living abroad, right?
Living in paradise.
Yeah, right. At the election of qualified individual, okay, hold on. Yep, I was right. Okay, how about that? Okay, so here's what you want to remember. Section 9/11, paragraph D,
Okay.
as in small d, defines a qualified individual. All right, so the term qualified means whose tax home is in a foreign country. So you have to have a tax home, okay? That's the first point.
Yep.
And that means where you go to work from, sort of thing. And you have to be a bona fide resident.
Yep.
So it seems to me the key is, okay, you need to have a tax home. And that's also defined in there. So assuming tax home and bona fide resident should get you there, okay? Now the question is, do you have to have you don't have to be legally tax resident though, interestingly. Just a minute, test a bona fide residence. All right, if you tell them you're not a tax resident, you can't have it. Okay, it's starting to get too much here to read quickly. Okay, but the answer is, I agree with what Nomad Capitalist said, that it is possible, but the necessary condition is that you've got to have a tax home.
Right. And so here's what you can do is you can, my understanding, and it's not tax advice, but you get that tax ID from another country. And another piece of it they said that would be good is if you spend more time in that adopted country where you have the tax ID than the US, that's another thing that'll kind of, push things in favor of being a bona fide resident of that other country. And then that country where you have that tax ID and where you're a bona fide resident is actually a territorial tax country. So let's just say it's Panama, you're a tax resident in Panama, you spend 4 or 5 months of the year in Panama, so you're spending more time there than the US, but you're also not actually paying tax in Panama because it's territorial, but you're there and you have the tax ID, right?
There's no requirement. There's no requirement that you pay tax. Okay,
right.
Pay tax. Okay.
Right, and then you can spend, call it 2 months, 3 months, something reasonable in the States. And so this is another benefit of actually becoming a tax resident of a territorial tax country, and then maybe spending a little bit of time there, is that then you can use that bona fide resident status as a way to spend more than 30 days a year in the US and still claim the FEIE.
Yeah, okay, so couple things here, all right, and I don't want to get too far into this because I just don't have enough of this on my fingertips, okay? But the first point I want to make or suggest is I don't think you have to be a tax resident of the other country. Okay, tax home is not necessarily the same as tax residence.
Okay.
Number one. Number two, what you should do is, just do a search on the IRS. There's the 2555, the foreign earned income exclusion, is far more complicated than it looks. Now, so you're going to do a search on that, but also publication 54, IRS publication 54 will give you some information. And there's also a guy who I have talked to once or twice over the years. Hold on a minute. He actually wrote a book. He's a tax preparer in Panama, foreign earned income exclusion. Yeah, I found it. It came right up. Okay, now I'm going to give you this, and although this is a plug for this guy's book, it's not really, because actually it's too expensive. It's over $200. All right. You do a search on Amazon, foreign earned income exclusion. Now, I'm not vouching for the content of the book. I don't know. I'm just giving you another source here. But there's a guy here named Clinton J. Donnelly, who is, I believe, an enrolled agent. He's a U.S. tax preparer in Panama, who wrote this book. And
I see it.
Okay, there's a Kindle edition for $50. It's surely worth it.
Yep.
So maybe check that out a little bit, okay? So I will summarize what I've attempted to say with, yes, I think what you're describing is possible. All right, but exactly what things you need to establish to get there, I'm not going to commit to that, without looking at it a little more deeply, right?
Fair enough. Something people can take a look at.
Yeah, have a look at it. Well, there's all kinds of books on this now. Unbelievable. I see on Amazon. So, but remember that books are just written by anybody, right?
Yep.
So what was it Reagan used to always say to Gorbachev? Trust but verify. Yeah. Trust but verify.
Do you have any books? Do you have any published books?
Do I have any published books? No.
Yeah, have you ever written a book?
I probably got 600-700 blog posts on every conceivable topic under the sun.
You probably get an assistant to kind of formulate that into a book.
Well, actually, somebody did formulate it into a book, all my articles on tax connections, but I just don't have the book for distribution. It's about 600 pages of my articles on these topics. There's a lot of them. I was surprised how many there were. You got to understand here that this information is always time sensitive, okay? And things change. What you need is a way to think about this stuff. More than you need. I mean, yeah, you need timely information, but that comes and goes. But the principles of thought do not change.
Cool. Well, that's probably enough on that for now.
Yeah, let me give you another recommendation. Here, I'll give you a recommendation for a book. It's a friend of mine. Olivia Wagner's 1040 Abroad. Hang on a minute. How can I possibly recommend somebody's book that doesn't include Olivia Wagner? Mistake that is.
1040 Abroad. Cool. Yeah, I think I've seen this website. She's in Toronto as well.
Oh, you know him?
No, I think I've seen the site though.
Well, hang on a minute. Something about being a worldly citizen.
Well, I kind of need to get running as well. It's definitely been really educational.
Okay, right here. Hold on.
Okay.
U.S. taxes for worldly Americans.
That's me.
Yeah, that's you. So that book is for you. Better hurry up. There's only one left.
Well, this is cool because I'll try to get all these guys on the My Latin Life podcast to talk to us about the do's and don'ts.
You know what I would do? I would get Clinton Donnelly on your podcast to talk about the foreign earned income exclusion.
Yeah, that'd be cool. Well, I guess again, John, just thank you for your time and expertise. I hope the audience can appreciate this because there's not too many people that not only can talk about this stuff, but then also do talk about this stuff on an unscripted, kind of off the cuff conversation podcast. So I hope the audience can appreciate all the free value that John is providing here. And, thanks for having me. Thanks for taking the time. Again, mylatinlife.com. Check us out on Twitter at mylatinlife. We have a podcast as well, all major podcast players, Spotify, Apple, etc. Hopefully that's all linked up in the show notes. And if you're interested in Latin America, living abroad in Latin America, feel free to get in touch with us and, of course, check out our materials.
All right. In closing, with relation to anything I've said today, trust but verify. Okay. And you can find me anyway at citizenshipsolutions.ca or Twitter at expatriation law. Okay. We'll pick it up again soon.
Cheers.